weekly option expiry as well. Ajit Mishra now, SVP Research, Religare Broking, and G. Chokalingam, founder and MD, Economics Research, joins in. Morning, gentlemen. Thanks for joining in. Ajit, what's happening on the charts? Monday, Tuesday, Wednesday, and now today, Thursday. The first hour of trade is exactly the opposite of what the last hour of trade is looking like. I believe 21,488 is going to be an important level of support. We've bounced back from those levels over the last few days. But as we go into the last 45 odd minutes, selling is emerging and we're pretty much at the day's low point.
Yeah, good afternoon, Samina. So, Samina, it's almost 2 weeks now, in fact, rather, that we are seeing this consolidation or discussion going on among the bulls and bears. The good part is that the bulls are defending 21,500 decisively. Intraday, we penetrated that mark yesterday, but in no time we have recovered and ended around the day's high. And today also we are seeing that despite the underperformance from the banking space, we have like select index measures, specifically Reliance, which is single-handedly helping the index to maintain the positive tone, amid this negativity. So as of now, we feel that it's a healthy consolidation that we are seeing in the markets, and on the sector-specific front, stock-specific front, there is no shortage of opportunities. If you talk about any of the sector, means excluding media, wherein we are not seeing any consistency in the buying, but rest of the fact, on the rotational basis, we are seeing buying interest emerging. So that is a healthy market as long as we are not seeing any change in the trend on that front, or Nifty, slipping below 21,500 mark. It's a buy and dip, something that one should definitely continue with. For the fresh momentum in the index, we need a close above 21,800 mark. And obviously, in case if it coincides with strength in the banking, that would further add to the momentum. But as of now, I feel that this consolidation will continue. So one should continue with stock-specific approach until we reclaim 21,800 in Nifty.
Choka, what do you think? How are you viewing the markets right now? Do you feel the uncertainty? Ajit, I'm going to take a cue from Harsh's question on banking. How would you approach Bank Nifty? Would you consider a long year? Again, leadership or some support from Bank Nifty is going to be critical for the index to make new highs.
That is true, Samina. In fact, the only challenge that we are seeing right now in the market is the underperformance of select, private banking majors and the IT majors. So in IT, obviously, it's natural nervousness ahead of the numbers, but the mixed trend within the large cap private banks is something which is keeping this tussle on. And I feel that for the banking index to make any meaningful move, we should hold 47,600 mark, on the closing basis. Then we can see this, momentum shifting towards from sideways or negative to upward. And of course, as I said, the alignment within the private banking majors, like a couple of days ago, we were seeing that SBSP and Kotak were witnessing a decline, while ICICI and Axis were holding up. So this similar kind of a move that we are still seeing within the private banking majors. So until this alignment within the private bank, won't coincide, I doubt that there will be any meaningful or sustained move. So for our index, I feel that sticking with the Nifty is a better bet if somebody is trading on a short-term basis.
Right. Ajit, and your picks, if I can ask you?
Yeah, so both the recommendations, Harsh, are on the long side. The first one on the list, we have Syngene, after this decent corrective phase, the stock has formed a strong base, and it is off late, witnessed a breakout from the consolidation range, but it has reclaimed the short-term averages also. So we expect this recovery to strengthen further, and 765 is what we are eyeing in the near future. So one can accumulate at the current levels with 724 in the stock. And the other name is the best performing name within the two-wheeler space, TVS, where we are seeing consistent buying interest, and a fresh breakout, a month-long consolidation zone has ended today with a very strong volume. So we expect this momentum to continue in TVS, and 2200 is something that we are eyeing in the short term.
Choka, we were talking about this only this morning and yesterday, actually, of how with the surge in capital markets, December volumes hitting record day, now only 25 points higher on the index is what we have. So it's actually pretty much at the day's low point from where we started the day, of course. But, you know, Ajit, I'll come to you while we're taking trade calls as we get into the last 20-odd minutes of trade. How would you play TCS and Infosys ahead of numbers? Any strategy at all on either of these counters? Buy today, sell tomorrow, sell today, buy tomorrow, whatever you like.
Samina, though we are discussing that there could be further disappointment from the earnings front, I feel that somehow we have discounted the kind of decline that we were seeing in both the IT majors, and we are still seeing this decline continuing in Infosys. I don't see any major slide from the current level, so maybe 5-6% kind of a cut, is possible in case if the number goes completely out of sync. But if you are an investor, then definitely one should look for buying opportunities on those dips. So I personally don't feel that speculating based before the numbers is a good idea, considering that we are already sitting on around the record highs, and there could be excessive volatility. But yes, I feel that the charts are indicating that downside seems capped in the IT majors. So instead, if it opens lower, maybe close to around 5-6%, both TCS and Infosys, one can look for investment perspective, but shorting at those levels is not recommended.
Right, Mr. Chokalingam, would love your views on the IT space as well. Of course, earnings are right.
Hero MotoCorp, 5% higher. It's the top gainer on the index right now.
Yeah, that's right. In fact, the entire other space, we are seeing consistent buying interest. So if you exclude a couple of names like Maruti, which is not participating in sync with the move, largely you'll see that all the auto majors, TVS, Hero MotoCorp, Aisha, they all are doing well. So, Hero MotoCorp, after this move that we are seeing today, volume price action, this indicates that those are completely under control. And as per the range, consolidation range, I won't be surprised that we see the stock inching towards 45, 50, 4600 levels first before seeing any meaningful, profit taking. So yes, one can continue to hold long. So 42.70 should be your trading stop if you are having any existing long position. You can buy fresh also with those levels.
Choka, what do you think? Two-wheelers will do better in the auto pack ahead of numbers. We've seen those monthly sale numbers, which some may
positive there. But Ajit, your views with regard to charts? We've seen a significant run up now.
So in fact, Harsh, it's been almost 2 years now that we are seeing Reliance coming out of this consolidation. So I feel just the beginning, considering that the broader range that we were trading in for almost nearly 2 years was 2025-50 on the higher side. So post this breakout, we have room towards 3000, 3050. That could be the first area of leader, and then positioning maybe close to 3300 mark. So if you are planning, let's say, for positional trade, then definitely one can even look at current levels with 2580 as a stop and 3000 in the positional target.
Right. MRPL also is looking quite good, 20% high on that one. Chennai Petroleum is also having a good day. Choka, there was a report as well that came out, I think, highlighting why some of these counters may still look good. Do you track beyond RIL, if you're just looking at the oil and gas pack, MRPL, Chennai Petroleum, anything on that? HPCL, all of them are having a good day today. Any of these oil and gas stocks that you would trade on?
So MRPL, Chennai Petro, one thing which is we are seeing in common that these names were beaten down since ages, and reclaiming their record highs and post that maintaining this kind of momentum clearly shows that the overhang that we had means the last several years we were seeing that for MRPL 120-25 being the upper band. So we are finally decisively crossed that mark. So now we are seeing fresh banks, and after this move that we are seeing today, almost 6 times of the average volume and the kind of price action, this momentum is likely to sustain. And for fresh buying, I would recommend to wait. Let's stop to witness any dip around 150, 145 area. Then one can look for fresh long positions with 130 as a stop. And same hold true for Chennai Petro also, similar kind of price action if you talk about on the monthly charts. But yes, it was among the top performing name, and it outperformed MRPL in the recent run. and the overall moves, it's largely in sync with the what we are seeing in the other names. So yes, you can hold this also with 785 as a stop, and the upside is open. So keep on trailing your stop losses on a very 4 to 5% kind of a rise.
Right. If I can go back to Mr. Chokalingam, so your views with regard to
I recommend set stocks.
Sure, Ajit, any views that you have there, any preferences?
So one thing, Harsh, which we have been observing is that all these names that after the initial carnage, we have been seeing base formations from these names, and Zomato is among the top performing name in the last 6-8 months. And the kind of distribution that we had around 140 levels, it's trying to overcome that mark now. So this indicates that obviously since we are entering into the earnings season, so obviously it's going to be the biggest trigger that how the company is going to perform on the financial front. But as of now, it looks okay to us. Means if you are considering for short-term bets, with strict stop at 132, one can continue to look for long positions, and the record highs close to around 160-65 is something that one can wait for.
Choka, we've got another 5-10 minutes to go, and I know it's always tough to ask for a fundamental call when it's short term, but tactically for our viewers as we wrap up in the next few minutes.
Yeah, so at the beginning we talked about TVS and the other name Syngene, which we feel that one can continue to hold, and one can add AB Capital to that list because now we are seeing almost 7-8 months of corrective phase ending. And today's price action combined with volumes, gives us the confirmation that the negativity that we were seeing in the last several months, it's likely to overcome that mark. And in the near future, maybe around 190-95 could be the zone where. So with stop at 175, one can look AB Capital alongside with the other two names.
Understood. Thanks so much for that. Let me quickly also move it back with regard to a couple of quick names that we can try and cover. One was the likes of Bharti Airtel. Let me come to you, Ajit, first. We in fact had a favorable note coming in from Jefferies, but anything on the technical side that you are seeing in terms of that one? What are your views?
So it's a consistent performer within the telecom space, Harsh, and there was hardly any major correction even during the tough times, something that the stock has been witnessing for the last several years. So that clearly shows the kind of outperformance that we are seeing in the stock within the telecom space. And but yeah, fresh buying, I would refrain considering that this looks slightly stretched after this recent spell of up move from 960 to 1060 levels. So there's a possibility that we might see a dip towards 1040, 1030 area first before any meaningful up move. So if you are planning any fresh trade, then one should wait and let the stock witness some correction for fresh buying. But yeah, if you are a positional investor or means a long-term investor, you can continue to stay put.
And Mr. Chokalingam, sir, your views, because the target price has been... same question to you, Ajit. Any NBFCs which you are finding interesting on charts?
So, Bajaj Finance is something that one can definitely look at. Why? Because almost more than 2 years now that we have been seeing the stock, hovering in this band, which is upper band around 1800 mark, and from the last, almost 1 year, we have been seeing higher highs formation, higher lows formation. So now we are very closer to the upper band of this consolidation range. So a decisive break above 1750 might form the next leg of the up move. The way we are seeing the move in Reliance is something that it might also witness. So yes, if somebody is looking for accumulation, then Bajaj Finance can be the one candidate that one can look at.
Right. Thank you so much for that, Ajit. We'll let you go on that note. Thank you so much, Chokalingam sir. It's been a pleasure interacting with you and for all your views. But we're very close to mark.